And that means that we are now live on our recording for a halftime report here on 6/15/2020. It is Monday morning. The market's got a lot of interesting price action and a lot of perspectives that we got to unpack and kind of talk about here. Coach Tim, we've got Coach Matt, we've got Mark, we've got Emily, Coach Emily from the Women in Trading blog, and Cody producing on the back end. Now, you are watching this as a recording because, Matt, technology doesn't always work the way you want, does it?
No, it does not. And we were having a difficult time going live on Google with YouTube and whatnot. We're in the process of fixing that. Google did some updates. Team Tackle, this does not mean short Google. That's not what it means. But let's take a quick peek at that chart just in case. Nope, do not short Google. But it is good to be here. Just wanted to get out a recording for our community. We got a big week in the market, and we're starting to see some things in the market that, we haven't seen in the last couple months.
Yeah, I mean, obviously the price action on Thursday kind of is that one day that you hadn't seen in several months now. And then even on Friday, the bulls came back, tried to rally it through the day. We talked about it on the halftime show that day, gave up some of the gains, couldn't really hold all that morning gap that happened. And then even today's action is very, very interesting in my opinion. Let's start with the price action, Matt. Then we'll unpack the news and get Mark and Emily's take on the news and the perspective on that. But bring up the S&P 500 if you can, and just kind of talk about the futures on Sunday night coming into today's action and kind of where we are at this point here on midday on Monday.
Yeah, looking at this just from a technical perspective very quickly, last Thursday coming out post-Fed meeting, a little bit of maybe a little bit of a Fed hangover as we've seen just the metric rise in prices over the course of the last 2.5 months, largely given, what the Fed's response has been from a monetary policy perspective. But when they came out there and I don't even want to say gave us updated guidelines and guidances from an economic perspective, but just reaffirm what they have been saying from an economic perspective, that this is not going to be a V-shaped recovery. It's going to be something that's going to be a little bit more extensive than that we're going to have to take this thing probably a little bit more serious than we have in recent history. The market just kind of sold off fairly aggressively in the light of what the Fed's comments were, even though the Fed did not say anything specifically that we did not already know. It just kind of woke up the market to a certain extent. And you saw that quick little sell-off coming into the 200-day moving average. We talked on Friday during the halftime report how important it was to see these levels of support hold. And then on the overnight action, looking at this on a 30-minute chart, on the overnight action, this is a sell-off on Thursday, the little slowing momentum that we saw on Friday. And then when the futures market opened up on Sunday night, you saw an initial just kind of slowing momentum as it was trying to hold that 2980 by 3000 level. Once that European market opened up, you just saw a rash of selling. And a little bit of that was due to some negative data we got out of China last night. A couple economic reports we did get out of China. Retail sales came in at a negative 6.3% versus the expectation of 6%. Industrial production did not recover as much as was anticipated as well, came in at 4.4%. And so we did have some negative data coming out of China, but you're also seeing a little bit of a pickup in COVID-19 cases around the world. And quite frankly, the market has discounted any negativity we've seen in the last month and a half or so from an economic perspective. It woke up to that reality a little bit post-Fed on Wednesday, and it's also discounted any increases we've had from a virus perspective. And it just seems like what that sell-off day on Thursday kind of woke up the market to be that maybe not everything is rosy out there, maybe not everything is going to V-shape recovery, and maybe this is going to be a little bit more extensive than we originally thought. And so the market has woken up a little bit to the impact of these news cycles. And this is something we have not seen in recent history. In recent history, as this market is up, and especially from this moment here, where you're really kind of in mid-May, you saw that theme start to develop that, all right, we're going to reopen the economy. Everybody's going to get back out there to in the workplace, at the park, at the gym, whatever the case might be. And there was just that, hope and that belief that everything was just going to be better coming as we reopened the economy. And then when the Fed said what they did, it kind of threw a little bit of a wrench into that. Looking at it from a little bit of a shorter time frame here, As the market is selling off on the overnight, it finds support right there at about 29.25. Double bottoms, double bottom, double top scenario. And then right here, Tim, you start to see the market start to pick up during the cash open of the U.S. Market. And this is what you want to see from a buyer's perspective. You want to see support hold from an intraday perspective. You want to see it reclaim that 3,000 level, which it has done. And a little bit, not a lot of news here today, but we did get one economic report. We did get one economic report this morning that could have had a little bit of an impact here. Right here at about 6:30, about an hour before the market opens, Empire State Manufacturing Index came in at a really, really good number. The expectation was -30. It came in at -48 last month. It only came in at a -2. And to see this, type of recovery, I mean, just in the last couple months, to go from a -75 handle to a -50 handle to a negative, to now just a -0.2. That was some really impressive economic data coming out of the Empire State Manufacturing Index. And that just so happened to be right into this range as the market is recovering on its intraday analysis from the overnight action. That comes out, the market, then the cash open happens on the backs of that fairly positive economic report, and you see the market recover here. So from a daily perspective, taking out the volatility of the intraday perspective, this is what you want to see from that buyers, the market recovering on the intraday and trying to hold that 3,000 level. And why this is so important, in my opinion, that the market holds this level is that I am increasingly getting a little bit more concerned with the market waking up to the economic reality. I've said for about 5 weeks now in the halftime report that I'm not too concerned as long as the market doesn't sell negative data. But from last Thursday on, they're starting to wake up to those headlines, and they're starting to wake up to some of the negative data from an economic perspective as well as a virus perspective. So my concern personally is increased given what I'm seeing over the last 3 trading days. But from a buyer's perspective, specifically from a technical perspective, this is very important to hold here. I mean, when you're looking at some of these distressed areas of the market, the industrial plays, the financial plays, those economy reopening up plays, the energy plays. When you're looking at CLR here, let's take a quick peek at just a couple of these from the scanner reports over the weekend. When you're looking at CLR, just sitting right there at support level, a really good technical pattern, really good price movement that you're seeing. You want to see that 1530 level hold. If the market starts selling that off a little bit today, it throws a little bit of a wrench in that analysis when you're looking at some of these other, continental resources, but you're seeing another energy play here in Marathon Oil, a really pure, great technical setup. When you're looking at some of those, economy reopening plays like the cruise lines, Royal Caribbean down fairly significant this morning, but it's recovering on the intraday and perhaps, setting up for a really, really good trigger. When you're looking at MGM, another, economy reopening up theme, great technical pattern here starting to set up with a potential trigger above $20. And then obviously the airlines with, throw a dart at them. They're all looking very, very similar. Really good technical setup here on Spirit Airlines as that retracement came down into the old resistance handle there at about 1650. Same thing on Delta. And so the reason that I feel this is so important today is really kind of what I was saying on Thursday as well as on Friday of last week, that if the market does hold its 3,000 level of support, which is trying to over the last couple trading days, yes, a little increase of volatility to the downside, a little bit of pickup in just the negativity being taken hold in the marketplace. But if it does hold that level and we do see that upward movement in price from an intraday and a daily perspective, you have so many really, really good, wonderful potential technical triggers for swing trades if we hold this level. If we don't hold this level, a lot of those technical triggers won't happen.
And so much of this, obviously, this pullback has been created from last week's selling. Mark, you made a point. You and Matt and I were talking about this with Cody and Emily in the pre-production about how the market's starting to feel like it wants to sell some negative news, whether it's the Fed on Thursday carrying through from the meeting on Wednesday, whether it's over the weekend from virus outbreaks, whatever it might be. Do you think, does the market feel different to you, Mark, than it did, say, 2 weeks ago, 3 weeks ago? And what's your read on where we are right now?
Yeah, no, I think absolutely. I mean, Matt was talking pre-production that, the market might get to the point now where there's no more free passes, right? We talked a million times how it didn't matter what the economic report was, the market ignored it. Didn't matter what the earnings was, the market ignored it. And so the market for a good 2-month stretch didn't matter. I mean, we joke, fundamentals don't matter now. Earnings don't matter now. Nothing matters now. It's just a relentless V shape. Everything's going to be fine one day. And starting with Powell on Thursday saying, hey, it's going to take a couple years for this economy to recover, to, news on the coronavirus. Now, you might think, oh, that's stupid for the market. I mean, the market was down 900 points at one point in the overnight. Well, that's stupid. Well, that might be. But the main point, I think, and the biggest takeaway is that it is selling on negative headlines for the first time. Little jittery. So and that is something fundamentally that we did not see. For a 2-month stretch. So
Emily, two quick things. Number one, it's not that we've seen any new data coming out of the weekend or anything new from Powell's press conference on Wednesday to the market reaction on Thursday. There's nothing new here. Anything Powell said last week, we've known for months and months and months now. There's no update there. He did not say one thing new from an economic perspective. He reaffirmed what the Fed has been saying, that this is going to take some time, that we're not going to see a V-shaped economic recovery. I mean, I remember being in the halftime report just a week and a half ago talking about how there was a Fed member talking about for us to achieve a V-shaped recovery, we'd have to have massive more stimulus and negative interest rate. And so the Fed, it's not like the Fed is trying to throw cold water here. They basically reaffirmed what they said. And now the second point, and then I want to bring Coach Emma in to get her take on this, Tim. But the second thing is, we're going to hear a lot more from Powell this week. He's given testimony both to the Senate Finance Committee, and he's given testimony to the House this week on Tuesday and Wednesday. So we'll see if he has anything updated. I fully expect him to reaffirm everything he's been saying, but those could be market volatility days as well.
Yeah, Coach Emily, I just want to get your quick take on how you're approaching the pullback here. Obviously, market sold the news. We were down big on Thursday, carrying through all the things Matt and Mark have been breaking down here. But how are you approaching the pullback here as a trader, Emily? And you go ahead and come on in and give us that perspective.
Well, I've been scratching my head for a long. I think I'm growing a bald spot in the middle of my head because I've been scratching my head ever since this whole thing started, right? And even going back to a week ago Friday with the unemployment rate coming out, I even posted something because it's so hard to read the market and how they're reacting to it. And my question that I've been asking myself today is, why is the market reacting to the news now? Like Matt said, there's nothing new about what Powell said. There's nothing new about the viruses. We knew that once the economy kind of started to open up again, that we were going to see a spike in cases going up. So why the market is reacting now is kind of like what I'm scratching my head at, is trying to figure out, well, why now? And for how long is it going to react to the news before we start ignoring the news again? So I'm really like at a point where I'm just like, I don't even know what to think of it right now. I'm just trying to kind of figure it out. But like we always do as traders, we just look at the price action and we trade what we see. But there's still that like lingering question of, why is it reacting now versus before?
Mark, was there anything new in the COVID data over the weekend? Outbreaks? I did see the stuff. Matt brought it up in China, I believe in Beijing. They had to lock down a little bit of their city. They had some outbreak there. They had some stuff in Japan as well. In the U.S., we've had 20 states with increasing cases. Is there anything? Is it the data in coronavirus, Mark? The fear of the second wave, fear of extending the lockdowns? Is there anything new in the data, do you believe?
Well, I mean, there's some new, COVID data. It's not horrific. It's not great. Hospitalizations in Arizona are up. About half the states are trending upward. I mean, there's nothing dramatic. Oh my God. It's not like when we had it in February where we're like, oh my gosh, South Korea and Italy are having huge spikes. This thing's spreading everywhere around the globe. These are modest incremental increases. They're trending in the wrong direction, right? They're not horrific, which is one of the reasons you've seen the market get bought up so quickly today. But they're not great either. But I really think the big thing is, it's not that the nature of the news itself is that the news did create such a massive overnight selling. We haven't seen an overnight session like that in a while. We have not seen an overnight session like that in a while.
Especially coming into a Sunday, Mark. I mean,
Oh, the Mondays have always been euphoric, right?
Coming into those European Opens. I mean, once that economy reopening up theme became popular, 6 weeks ago in the marketplace, or 5 weeks ago, most of those Sunday, opens have seen positive momentum, and coming into Monday cash open, you've seen positive momentum. And I'm not suggesting we're waking up to a new reality in the market. I mean, just a couple days does not make that. But it is something to keep in the back of your head that, maybe the freight train of just price appreciation is not going to be the standard moving into the future. Maybe we're getting back into, maybe a little bit more detailed analysis than just simply hitting the buy order as fast as we can. So it's also not something I'm too concerned about from a technical perspective. If 3,000 holds, I mean, those technical setups across the board are going to be really, really, really good. And pertaining to virus, I mean, Tim, you mentioned that 20 states. Mark, you mentioned half the states. That's not anything new. We started seeing those reports 7 to 10 days ago.
Yeah.
We saw them all throughout last week before the Fed came out on Wednesday and Thursday of last week. We saw a little bit of an outbreak in Beijing, but I mean, that was like 70 people, and it was tied to this one marketplace in Beijing, and they locked it down just out of cautionary concerns. Japan saw a little bit of a spike. Utah and Oregon, put on hold to some of the reopening themes. But I mean, to me, it's really simple. 3,000 has to hold technically. And if America does not want this economy to shut down again and does not want a second, I don't believe we're in a second wave, by the way. I think this is an extension of the first wave. We're seeing moderate increases across the board in those 20, 25 states. We're not seeing massive spikes. We're not seeing hospitals ran over. We're just seeing, moderate spikes, across the board. So in terms of, if we don't want to see this economy shut down again, guys, it's really simple. When you're at your job, social distance. When you're going to a store, social distance and wear a mask. Just take it with the seriousness that it needs, and we're going to get back from an economic perspective. If America does not take this virus for all the serious that it needs to be taken with, we're probably going to see more headlines like Utah and Oregon delaying economy reopening up themes.
Mm-hmm. Yeah.
And I guess the biggest thing I have in thinking about this morning is, if Powell pointing out that it's going to take a couple years for the economy to get on track creates this big technical sell-off on Thursday, and if a little slight increase in COVID-19 caused the futures to go down 900, this market is not confident enough if actually something actually was a news event of significance, right? Because as you guys said, this is all stuff we already knew. What happens when something happens that we don't know, right?
Mm-hmm.
Especially in this specific environment, right?
Yeah.
If we get a shock this week, I mean, the market could shake it off and, get back to its bullish mentality. Like I said, I'm taking this as a buying opportunity until 3,000, does not hold in the S&P, until the moving averages in the Dow Jones and the Russell 2000, that 50-day moving average doesn't hold there. And I'm still taking this as a bullish opportunity until looking at the NQ contract right there, the NASDAQ, until it doesn't hold its support levels. And so until support violates here, I don't think we should be overtly panicking. But I just think that, the concern should increase. Okay. The concern should increase given the fact that we are seeing the market respond to the same data from a monetary economic perspective and a virus perspective. They're responding a little bit differently in the last 3 trading days than they have over the course of the last couple months. So it's just something to keep an eye on. But until those support level breaks, let's still look at this as a buying opportunity.
And I guess the last point on it is, because of this analysis, I think it's really prudent advice, which is always good advice anyways. Don't be over leveraged. Don't have your whole account on, just the basic money management. Make your trades, do your plan, but realize that there might be, hey, the market sells news now, so something you're going to have to live with it. It's not going to keep you from trading. Just don't be over leveraged and be irresponsible is all.
Well, I mean, and Mark, I certainly agree with that 100%. Given what we've seen in the last 3 days, the market's a little jittery here. When you're looking at a lot of those distressed areas of the market, don't push all the chips to the middle of the table. Keep position sizes tight. I would actually reduce position size in this environment. You still take the trades, you just reduce your position size. And so when you're and that can be said when you're looking at different technical patterns. Remove the virus scenarios, remove the headlines, remove Powell from Wednesday and Thursday of last week, remove all economic concerns, and just look at it from a purely technical perspective. Take Delta Airlines, for example. Delta, one of those distressed areas that saw a metric rise coming off the lows here, set that new high right there at about 37.5. Nice little retracement coming back down into support. That retracement is a standard bullish retracement, no doubt about that. But we are also talking about a retracement that went from 37 all the way down to 27, or a 25% decreasing price action before we found that support level. So you're talking about a standard retracement, but you're also talking about a fairly significant volatile retracement as well. And then in this environment, you're looking at this technical setup and you're like, wow, I really like that bounce off the 20-day moving average. I like the momentum starting to pick up here. I like the decrease in volume on the sell-off versus the upward movements in prices on volume. I like everything from a technical perspective. I like the trigger right there above $30.60, which was an old intraday level. So you take that from a technical perspective, but in the back of your mind, you got to realize the market did just sell 25% on Delta last week. Mm-hmm. And so even though the retracement is a standard retracement, given the fact that, we're seeing a 50% Fibonacci retracement, we're seeing, it kicks off that 20-day rising moving average, it's still a very, very volatile situation right now. And even without that volatility, bullish retracements don't have the same probability analysis from a successful probability perspective that, say, bullish breakouts have. The same thing with bearish retracements versus bearish breakdowns. So because we're seeing a pullback scenario with increasing volatility, given that given the fact that we're seeing the market not just completely discount negative news out of the last 3 to 4 trading days, yes, you probably want to still make the trade on these distressed areas of the market once they confirm, but you also want to be a little bit cautious from a position sizing perspective, in my opinion.
Yeah. Let's run through the commodities real quick here, Maddie. There's not a lot to update. Maybe the dollar, probably most interesting, but crude, gold, and then the dollar. Give me a quick technical read if you can.
Well, the dollar's just sitting up here. We talked about this last week, how the dollar was, seeing that nice little rise. And, Tim, you're like, is this a bearish retracement or is this something more? Because we did see it, aggressively move up there for a couple of days. And I think all of us had this as a bearish retracement, that the market was going to find some type of resistance area. And no, we have not yet confirmed here on the dollar coming back down, but you're starting to see that slow its momentum. And now, Cody, I know you did the Forex report over the weekend, and you have a couple potential trades you're looking at, given that the dollar's starting to slow down as it's bearish retracement, more like a bear flag at this point. But as we're starting to see that slowing momentum on the dollar, what currencies are you looking at this week?
Oh, the main two I've been looking at are the New Zealand dollar and the Australian dollar. Most notably, the Australian dollar has some really good setups. I talked about the beauty of a doji over at the Forex report. And on the Aussie dollar, there's a couple other cross pairs that look really good on it, like the Japanese yen to the Aussie dollar. Yeah, that one right there. So, and it's really starting to slow down, coming to those moving averages. We see this little pocket trigger will be right above. You could do an intraday right there, right at that high base, or above that 200, and to get a nice swing trade to the upside.
I mean, honestly, this is why we no longer do the stop entry target in the scanner reports, because those things need to be updated constantly.
Yeah, they do.
And when you're looking at this pullback on the Aussie dollar, Japanese yen, you're seeing the same thing against the dollar as well. I mean, I like them both. I kind of like this Aussie Japanese yen setup a little bit better. But this is what you like to see when you're seeing these retracements. You like to see a double bottom. You like to see the trend to the downward movements in price really kind of slow down against the previous movements in price to the downside. And then when you're looking to trigger here, you got a nice little high base intraday that you could set up right there above 73.75. But you also got a nice little trend line here as well. Let me draw you a trend line. you have this trend line on the intraday that is coming down, that you're also breaking out that intraday trend line as well. So, looking at potential triggers there, I like that one on the Aussie dollar, Japanese yen pair. And when it came to the rankings of these currencies over the weekend, I mean, the two currencies that we were looking at in the scanner report meeting were the Aussie dollar as well as the New Zealand dollar. You nailed that one as well, Cody. NZD/USD here, same type of retracement, trying to hold its 9 EMAs. So, you're with that dollar, coming into, I don't even want to say it's coming into a known resistance level, because it's really not coming into a known resistance level. You're really just slowing its momentum at that 9 EMA. You don't have that deep retracement, but you do have some pretty good retracements happening on the Australian dollar and the New Zealand dollar. Keep an eye on those currencies this week.
Take a look at gold and crude oil if you can next here, Maddie, and let's get Mark's take on this. Gold stuck in the middle. I don't see anything new to update there. Anybody got anything on gold? Nothing.
Oh,
we can break it down tomorrow.
You're net seller protecting under 1680, and I am a broken record with gold. You're a net buyer above 1760, and in between 1680 and 1760, you're just hanging out.
Yep, kind of where it's at. Crude light here, though, kind of an interesting pattern on crude light. I see a little bit of momentum changing, obviously, in that chart as the moving averages are rolling over. Pivot to pivot kind of relationships are slowing down just a hair there, Matt. Matt, what you read there just on the chart on crude?
Well, I broke down crude's chart quite extensively on Friday, and so if you want to check out that detailed analysis on crude, check out the halftime report on Friday. But nothing has changed since Friday regarding crude, regarding the momentum I'm seeing in crude. I'm still not. I still don't personally like the pullback here for all the things I said on Friday. The slowing momentum in the trend, the rounding top there at 40, the violation of the pattern I'm seeing from a rise in price to consolidation, rise in price to consolidation, rise in price, and then we retrace. So I'm seeing a little bit of breakdown from a technical perspective, from a momentum perspective. I still like the trade above 40. I don't love it off the retracement.
Mm-hmm. Yeah, I'm with you on that. And by the way, Mark did a really good job breaking down all of that in the commodity report over the weekend as well. Some stuff you can go back and watch. By the way, Bitcoin holding a little bit of support. Emily, I don't know if you've been playing those cryptos lately, but I don't know. It's kind of an interesting chart here. In my opinion, above 10K, I'm going to get very interested. But it's playing defense there, Matt. Bitcoin easily could have been selling off on some of these little pivots, but hasn't done it. Anything in that chart grab your attention, Matt?
No, but our little nephew keeps texting me about crypto, and I'm like, I'm not the crypto guy. Like, you got to start bugging Tim. Like, stop bugging me.
Yeah.
But he says, this is how my nephew texts me. Yo, Matt, do you handle crypto? And I know that's the voice he puts it in too. I said, I don't trade crypto, but we analyze it. Get with Tim. And then he writes, so you've been using crypto for a couple of years, huh? Like, that's not what I said. That's not what my text message indicated. And then I called it a house of cards, and because he's like, what percentage of my portfolio? This is why I love our nephew. What percentage of my portfolio should be? He's 20 years old, like 20 years old. And he's not saying, hey, let me go buy that penny stock. He's like, what percentage of my portfolio should I be used to chase startup coins? I said, Deke, that's a house of cards, honestly less than 1%. And then he says, yo, what do you think of Ethereum and DeFi? Those are what I got most of my coin in. I'm like, I don't even know what to say.
I love it.
I have no clue. I like, literally, ask me a question on a stock, a commodity, or a currency there, Deke. I love it, though. What percentage of mine should I put in these startup coins? I'm like, oh, my goodness. At least he's asking the right questions, though.
It's encouraging when young people find interest in investing. I don't care what the medium is. And especially if he's asking you about percentage of portfolio, right? I mean, inspiring some of these young kids, Emily. At least he's looking at cryptos and doing something, right? I like it.
I'm not mad at that. That's awesome. And, hopefully that will be, something that will inspire him to even want to learn more. So, and get out of just the cryptos, but even get into equities and stuff like that. So that's kudos to him for wanting to learn.
Well, and it's not just Deke and our nephews and our cousins and all that jazz. I love the fact I see it all over Twitter, the hatred of these younger generations, right? I mean, a lot of it, that hatred of the younger generations getting interested in the markets is because they've outperformed those veteran traders in the last 2 months. So it's a lot of jealousy. That hatred is jealousy. It's envy to a large extent. I love the fact that these younger generations are getting interested, and I honestly don't care 2 cents why they're getting interested. I love the fact that they're getting interested. We've said many times that these generations coming up could be the most powerful generations in American history, but they have to embrace the financial world. They have to embrace the financial markets. And yeah, blame it on, stay at home, and blame it on the pandemic, and blame it on Robinhood, blame, or just simply say it's about time they woke up to the opportunities of the financial world. And yes, like many of us who got our asses handed to us when we were young and dumb traders, yeah, they're going to make young and dumb mistakes, but at least they're interested. And I'm willing to bet that a lot of them don't last, but I'm willing to bet a lot of them do as well, because of, like Deke, asking the right questions. What percentage of my portfolio should I use to invest in this highly speculative, terrible idea? But again, at least he's interested. I love the fact that he's interested. And it's our job as the generations that came before that generation to build them, to work with them, to teach them about what they're doing right, what they're doing wrong, and also listen to their ideas, because they're going to have new ideas that we ornery old men and women traders are going to blow out of the water first, but then we're going to, hey, maybe that actually is something that can work. So I absolutely love it. And I think we should celebrate. And I think we should stop making fun of, now, don't get me wrong. I'm going to make fun of Robinhood because I think they're a criminal organization that front runs orders and sells 68% of their order flow to Citadel, who front runs all of those orders and jacking up the price, and they're going to be holding it back. So I'm not going to give credit to Robinhood. I am going to give credit to the younger generations for finally waking up to the opportunity of the financial world, even if it is in one of the most difficult moments that we have ever dealt with from an investing perspective.
Yeah, I agree with you 100%. I said this on Friday. I was in another Facebook webinar, and I talked about that. And I said, the fact that they're actually, taking a chance and attempting to learn how to do this is great, but do it the right way, right? Get education, get coaching, get, mentorship, do everything right so that you can be trading in 10 years and 20 years from now, other than just, through this COVID season.
100%. And by the way, big ups for Deke to ask you the question, Matt. A lot of people, even within their own family, won't ask questions to other people, even when they're experts at something. It's incredible to me how people are so stubborn at times.
I got to get Deke with Jake.
Yeah,
Jake's the crypto guy.
Oh.
Jake would have all those answers for Deke. He could speak his language. Yo, Matt, he could speak that language. I got to get him with Tim or Jake.
I bet he would get along with Jake really well. Don't want to go long on this, Matt, but a couple of quick things.
Me of Jake a lot.
Oh, I agree.
You would love our nephew Dick. He has the next Jake LaMoure ability in him.
Awesome. That's what we need.
I agree. They would be a great fit, mentor, mentee. Yeah.
Because Deke also have a cars used salesman personality as well.
Yeah.
So.
Let's quickly look at the economic calendar here, Matt. Forexfactory.com.
I got to get Deke into tackle trading. That just reminded me. I got to get him.
Yeah, let's do it. There's a couple of things this week.
How was your response that you had zero desire to talk to me about that?
I want to talk about the economics. I love Deke, but I don't know what his interest is. I got to hear. I mean, if he's saying
tackle trade is becoming very well known about your transitions when you have stopped listening to any conversation. Gina will just be like, "Hey, what did you guys say again?" Or he'll just keep on talking over you without even caring what you've said. Tim is. Moving on now. Your transitions become infamous at Tackle Bro. We all know when you stopped caring about the conversation.
It's time to move on sometimes. I mean, that happens in life, right?
Hey, somebody has to keep time and watch the clock and make sure that we don't say too much in one segment, and that's Tim's job. So
that's right, Emily.
We just talk over him anyway. We ignore him. So.
Like right now.
Like right now.
That's exactly right. Let's talk economics if we can.
At least it was Emily that time and not me.
All right. Powell is testifying this week. Mark, I know it was the one thing I asked you what you're concerned about this week, and this is one thing that you had pointed to as a potential risk kind of avenue. In fact, he's going to be out there on Tuesday and Wednesday in front of some committee. I think the Senate Banking Committee, I believe, is what it is. Mark, what's your anticipation of the Powell testimony? Do you think there's the potential for risk here as well? I know that you're always looking for the risk.
Probably not. Like I doubt. I mean, Powell's going to give up and give his ultra dovish thing. There's probably zero chance that there's anything new. So I don't know if it's the one thing. My biggest concern isn't the Powell testimony. It's a technical sell-off, is algo shifting, but that's a whole different conversation. Powell is likely to say some version of exactly what he said last week. Fed's got your back. There's nothing we can't do. The only interesting thing that might come out of it in my analysis is he has made several pointed statements that Congress needs to spend more money, that we are not getting out of this hole without Congress spending more money. And so if for some reason a congressman or a senator, some testimony and it comes up and like, and it's Congress actually that worries me more about than Powell this week. Congress alluding to something like, well, we don't need that $600 a week, or we don't need something, I don't know. Whenever Powell speaks, something can happen, so you always make note of it. But we're probably likely to hear a lot of the same.
Yeah. The only thing I want a congressman or a senator to ask on Tuesday or Wednesday is, why did BlackRock why was BlackRock chosen for you to facilitate your quantitative easing program, which we're talking trillions of dollars here?
Mm-hmm.
Because I want that question to be asked, because Jay Powell has tens of millions of dollars in ETFs at BlackRock, tens of millions of dollars in ETFs at BlackRock that are invested in market index related ETFs. Is there a conflict of interest at the Fed? I want to know that.
Well, what kind of ETFs?
Jay Powell's not an economist, guys.
Right.
That's not who Jay Powell is. Jay Powell is a former executive of Wall Street. That's who Jay Powell is. And so I want the courage of our elected representatives to actually ask difficult questions instead of the cookie cutter bullshit I always hear from them.
Mm-hmm. The BlackRock ETFs he owns, are they just broad-based index funds, or are they
broad-based index funds? ETFs, all ETFs.
Obviously, Wall Street and the Fed have always been close. If you've ever been down to the financial district in New York City, they're not that far apart from each other. You can literally walk from the New York Federal Reserve down to Wall Street within a block or two. And obviously, they do a lot of business together. It would be a great question. I would love to know why BlackRock, and I get it, but just give me an answer. That would be a great question as well. And maybe some questions on where's the end here, guys? How much money are you going to actually expand this balance sheet to? I'd like to see some voices come in and maybe push back on the dovish policies that we've had. But Mark,
there needs to be some transparency with what the Fed is doing and how much money they're pumping into this market and where that money is going. Yeah. And until our cowardly elected representatives actually ask the difficult questions of Jay Powell, I could care less what Jay Powell has to say on Tuesday and Wednesday. He's going to give his same nonsense cookie cutter responses that he's been given for 6 weeks.
Mm-hmm. Let's talk some stocks here today as well, guys. Before we get right into the news on some of the companies, we're not going to get through all of them. We'll have some of them tomorrow in our halftime show. But there's some major stocks actually that I do want to hit. Emily, you got an event this week, which is one of the reasons why you joined us here today, also just to kind of hang out and talk markets as well. But Women in Trading on Friday, Emily, I'm excited about those events. They happen about once a month. Kind of explain it.
Well, it's just really a platform for, women who have either had interest in trading and really never knew how to get involved, and those who are involved in trading, but really, kind of like are, a fly and just kind of sit there behind the walls and just kind of, engage, but really not engage. And this is just a platform for them to come out and kind of share, how trading, is part of their life, and how they go around, being moms and wives and just, running day-to-day stuff, but also incorporating trading as part of that. So it's really just a platform for us to kind of like, have our voices without quite frankly, the interruption of men like you guys. But I love you guys.
Dude, we're all very big supporters.
I so wanted to interrupt you there, Emily.
Mike, can you man speak to us right now, Mark?
I just wanted to interrupt you there
please
because
explain to Emily.
Listen, I like poking I like Popey.
You know,
Like,
I love you guys, and I can take quite a bit from you guys, but my fellow ladies who are not quite comfortable with you fellows might not feel the same way. So that's why I've given them that platform for them to kind of come in there and just
Emily,
chat and
Tim's
talk about
feminine
whatever.
gene is really strong.
It's true. It's true. I'm in touch with my
Every
emotions.
justice was born and raised as a feminist, Tim.
I know, but still, that's why I have women in trading there for just us girls, and that's why it's pretty
Does
in
it count
pink
that I
too.
have 3 daughters that are all A-type personalities?
First of all, the
Again,
word feminist might have a negative connotation to some, but all humans should be feminists.
Wait a second. Hold on. No,
ay.
snowflake stuff out of here. Get out of here with that nonsense.
We're all feminists, and we definitely support any of those things. And I love the group, by the way. I hope you guys are having a lot of fun with those Friday night webinars. And generally, when you do the webinar, you'll usually blog that week as well. Is that going to happen this week?
Yep, I'm gonna put out a blog. I haven't figured out what to talk about yet. This whole, news with the Fed and everything kind of retracing back is gonna throw a wrench at me this week. But I'll figure out something to write about this week and post it out on Friday, and then we'll have our webinar at 8:30 on Friday night, and it's available to everybody. You don't have to be a pro member of Taco Trading. You're more than welcome to come and join us.
Yeah.
I try to keep it very simple and not get too complicated in terms of what we're talking about, but pretty much any lady who is listening to this right now is more than welcome to join us on Friday night at 8:30.
We'll keep promoting it throughout the entire week, and excited for that on Friday night. Make sure you find it on the website. A couple stocks here, man, I want to get into. Genius Brands, very interesting. By the way, I don't know what products these guys create. I got to look into their marketing and whatnot, because
It doesn't matter, because Arnold Schwarzenegger just made an agreement with Genius Brands to get paid in shares of Genius Brand common stock to start, promote, and launch a series on Genius Brands. I don't know what it is, what it's all about, but that just came across the wire. Arnold, tough guy, Predator. I'm going to watch Predator tonight.
Dude, now all of a sudden, Genius Brands, I don't know. Like, listen, did you think that we would be talking about Genius Brands as much as we've been talking about it recently?
No, I regret even bringing it up right now, but I kind of like the technical setup here.
Genius Brands, listen, I just love that they have options, right?
Listen, I belong to a lot of groups, obviously, when it comes to trading, but there's this one that I recently joined, and I'm regretting why I joined it, but it's a lot of my friends that I'm trying to educate are in that group, so I like to go in and kind of throw in my 2 cents and whatnot. But that is the most talked about stock in that group chat. It's been for like the last week, and I don't understand why.
Interesting. By the way, the thing from Arnold, Matt, you were mentioning, I didn't know the products either. He's doing Stan Lee's Superhero Kindergarten.
Yeah.
So it's a kids thing around like the Stan Lee animation stuff. I mean, it's a big sign.
It's really fascinating. He's like, no, don't pay me money. Pay me in stock.
Pay me in stock.
I want Genius stock. That's what I want.
Arnold's a great capitalist. He always has been, by the way, going way, way back. I like the idea. I like the move. Hopefully, good luck, Arnold. Good luck, Genius Brands. I'm rooting for that kind of thing. No problem with that.
He has not had the Warren Buffett impact on a bank stock, though. So
No.
we can't have the Arnie impact yet.
But maybe on cartoons. Maybe he can make that. This will be his stamp of approval. Shopify next year, man. Actually, pretty big news in my opinion. Shopify and Walmart go into a deal here where they're going to be putting, more of the e-commerce products and whatnot on Walmart's e-commerce website. So Walmart partnered with, I think, like 1,200 different locations, something along those lines. I find this to be very, very appealing news for Shopify. I don't know what the impact is for Walmart. It's kind of a good deal as well. Matt, what was your reaction to this news?
My reaction is positive for both. I take it. Walmart partners with Shopify to offer Walmart's marketplace to be available to Shopify's 1 million plus sellers. So obviously a bigger win for Shopify, being the smaller company, obviously.
Mm-hmm.
But Walmart, I took it as positive for Walmart as well. There's no trade setup here. I mean, there might be above 800 if you don't care about the ticket, 844. So if this is a stock that you like and you track, obviously it's had great performance over the course of the last 3 months. Real tight consolidation. Tight consolidation in this market is so weird to even say when you're going from 700 to 800 from a tight consolidation range. But when you compare it against what it was going, 300 all the way up to 640, 600 all the way up to, 800. That is tight consolidation in comparison to historical averages. But, if you're looking at that, you could potentially have a trigger above 1780. You're trying to stay above 1780 today, maybe a re-trigger above the high at 799. It doesn't shock me that 799 was the high of today. Maybe a trigger above 800 if you don't care about 844. Nothing for Walmart. I mean, setting on the 200-day moving average, maybe investors take a look at that. But, I personally am not interested in Walmart at this point. Shopify, maybe, interest a little peaked above 800.
BP next, if we can. Mark, I got to get your take on this one. When British Petroleum, one of the biggest oil companies in the world, comes out and says they're going to have to write down $13 to $17 million in write-downs, and that they believe that they're going to have...
You had the wrong letter there. It was not million, it was billion.
Billion, sorry. Absolutely. Thank you for correcting me.
We don't talk millions anymore. That was like, what was it? What was the Austin Powers? That was an Austin Powers.
$1 million.
I like it. But first of all, who does the better impression there? We might have to have an impressions contest on the podcast or something. Austin Power characters, no question. That is a blast from the past for me right there. But Mark, obviously concerns about the fundamentals in oil when you hear stories like this. They already lowered the dividend. They've already been talking about it. They were projecting prolonged low oil. And going back to what Matt's discussion has been for weeks about the U-shaped recovery in the economics, BP might be more in line with actually what's going to happen globally. When you see stories like this, does it give you concern about oil stocks and how you're playing them?
Well, I mean, it reaffirms why I like pipelines, midstream, and refineries better than producers. Now, BP is an integrated company, has a lot of everything, right? But if you have $35 oil, I mean, would it surprise you if oil traded between like $32 and $42 for like a long time, right?
Uh-huh.
I mean, it wouldn't surprise me at all. That's not robust. It's not a nightmare, but it's not exactly robust for producers. And so who can make money? Who's stable in this environment? It's why I haven't liked producers this entire time. I like the pipelines, like the refiners. They also have their own issues. If you want to play your oil direct through whatever other means, I like that too. But the producers themselves, they have headwinds. Now, if oil goes up to 55, 60 bucks, everybody's a winner, right? But if oil stays down in this 35, 45, this range, producers aren't the big winner here. Nobody's the big winner, but producers definitely, they're going to keep bleeding money.
Mm-hmm, mm-hmm. Matt, anything about the oil sector industry you want to add to that from Mark? I mean, do you have concern when you read storylines like this from BP?
Oh, I mean, yeah, I have concerns when I hear this from BP the same way I have concerns about the fundamental nature of this entire marketplace. It's not just BP. We've seen this, with companies across the board, removing guidance, lowering guidance, concerned about the economy, and again, it's just what BP said today, I don't think should catch anybody off guard. I don't think it should shock anybody. I mean, energy companies, they especially the drillers, they need oil at certain price points for them to be profitable. And, even though we don't know exactly what those price points are, we've seen anything from 50 to 40 to 22. But wherever those price points are, we know where oil was for months, underneath $30. We know the volatility that happened in April with negative prices. We know this oil volatility, especially to the downside over the last few months, is going to have a much bigger impact on the bottom line of BP and Exxon and Chevron and Schlumberger and Transocean than it will on the Valeros and the Phillips 66 and the Tesoros of the bunch. So, there's nothing BP said to me that was unexpected. These companies are going to lose money. But if oil does have the ability to get back above 40, show price appreciation, and probably more important, some market stability, where we don't see the metric rise and the metric lowering in prices, then at that point, then you probably, look at this as more of an investing perspective. Until we see that, it's all about trading in the energy sector.
Mm-hmm. Yeah, no, I'm with you. Only one more for me. I'm going to punt on a couple of other ones. We can talk about them tomorrow and bring them up when we go live on the halftime show. Last one for me, and then Matt, I'll get your last few as well. Docusign. actually going to be added. It was on our report over the weekend, one of our favorite companies to add to watch list and trade. It's been a wonderful trading vehicle for a long time. The trend has been a juggernaut. The retracements have been met with buying interest. The breakouts have been clean. A lot of good things to say about the stock, obviously. Now it's on the NASDAQ 100. It replaced United Airlines. Congratulations to Docusign. And
I
obviously,
want to say this is a Utah-based company, correct?
I don't know about that actually. No, I'm not sure. I'm not sure. I know that Doc Hub.
It's San Francisco, but I think they do have some areas in Utah as well. But Docusign, a company we really, really like. It's a dirty, sexy money candidate, which means it's a growth stock that we believe in the fundamentals long term. But a stock you can do cover calls on if you want to bring in some cash flow when the price isn't going straight up. But Docusign getting added to the NASDAQ 100, big win for Docusign. A really big win for Docusign. I mean, that's accepted at the big boy table now. And they kicked out an airline, I believe. Was it an airline?
United Airlines.
They kicked out United. I still want to know how United's a tech company, but they did kick out. They actually added a tech company, so good for the NASDAQ. But yeah, big win for Docusign. Even without that news, I love this breakout on Docusign. It was on the option for over the weekend. Nice little 7.5% price movement on the breakout. Hopefully you guys caught that from a trading perspective. So big ups for Docusign.
Yeah, wonderful looking pattern. Really, really clean. Love the company, obviously. Guys, from a news perspective, that's all I got. Matt, I know you had a couple companies that had vaccine news. I think AstraZeneca and Moderna.
We can talk about all those tomorrow. The last thing I'm going to just go through very quickly is a couple things. Number one, just want to make sure everybody's making sure that they're reading the newsletter. We did downgrade quite a few sectors of the market, not aggressively. Right, we're sitting on those support levels and we're seeing this as a bullish opportunity, but we downgraded a lot of them just in the face of the increasing volatility, the market waking up and selling some negative news for the first time in, perhaps 2.5 months. So we did downgrade the S&P, we downgraded materials, we downgraded technology, consumer staples, we upgraded real estate, downgraded utilities, healthcare, and upgraded discretionaries. Taking a quick peek at the technical setups here, obviously materials got the downgrade because it closed underneath the 200-day moving average, trying to hold that fairly important support level right there at 53.50. So keep an eye on materials at 53.50. Communications got a downgrade just because, again, it was more broad-based market, 5-point downgrade, trying to hold its support. Nothing to see here on communications, in my opinion, until communications gets back up above 55. Energy, got a downgrade as well. I am seeing this as a potential buying opportunity in energy, but as talked about last week, the same degree that it was time to start locking in profit as you were starting to inch your way up and getting overextended, you got to wait and see for that confirmation to actually happen. Getting back above 40 on energy and also reclaiming the 20-day moving average in the 9 EMA. I think those are important technical levels for anybody to really get aggressive in the energy space. Let's see it get above 41 before anybody gets out there too aggressively. Financials got the same type of downgrade that energy did. Industrials, the same type of downgrade energy did. Very similar analysis. Technology got a downgrade just because of the increase in volatility on the sell-off. I still love this sector. I think everybody here still loves this sector long-term. From a short-term perspective, let's get back above $100 there on technology. Consumer staples got a downgrade for a couple reasons. The failed breakout of the 200-day moving average, increasing volatility to the downside on Thursday and Friday. So we did downgrade that. This is more of a neutral type technical scenario, where in a lot of the other distressed areas of the market, you see not double tops of that 200-day moving average. You see a higher high and then a retracement into support. So staples is an area of the market I would probably shy away from right now. Real estate got an upgrade because we loved the close on Friday. And that's why real estate got the upgrade. It hit that 20-day moving average, but really responded quite positively. Trigger above 35.75 would be looking at for confirmation on real estate. Utilities did not get the upgrade that the real estate sector did. And a lot of times those sectors are very close to one another and how we rank them. It did not get the upgrade because we did not see the same type of bullish momentum coming into the close on utilities. It really kind of just held that sell-off. So utilities a little bit downgraded against its counterpart in real estate. Healthcare got a fairly substantial downgrade. Failed breakout, increasing volatility, selling coming into the 200-day moving average. Needs to hold that 200-day moving average for you to be, aggressive in healthcare outside of some of those, pharmaceutical plays that are in the short term. But let's give it a little bit of time to cook there at the 200-day moving average. And then consumer discretionary, we did upgrade to move in line with technology. And that's kind of what we were seeing, very similar technical setups.
And great job on all that analysis from the sector perspective. I mean, we spend a lot of time on the weekend, obviously, going through and ranking those. I love our scouting report meetings, the discussion around it, getting all the coaches' perspective, like Emily and Mark and everybody that go into that. So if you are a tackle trading pro, make sure you start with the newsletter over the weekend, then dig into those reports. There's a ton of great candidates and whatnot. We'll be looking at some of those tomorrow when our halftime report goes live. But let's get final thoughts here, guys. Mark, what's one thing you want to tell our community out there to pay attention to this week? What are you paying attention to? Final thought from you, sir.
It's something I've been saying for 6-7 weeks, right? You don't have to have a million trades out in this type of market to be successful. A lot of people, I mean, some of the moves that you see are, with 1 or 2 trades can be really, really powerful. Just be responsible, exercise proper money management. If this is a news-driven market, man, you don't know what the nature of the news. Could be good, could be bad. We don't know. But if this becomes a news-driven market, just be responsible and don't be over-leveraged and extended too much.
Mm-hmm. Let's give Emily, you got the next word here.
Same as Mark. Yesterday, we had our local WIT meetup on Zoom, and we're talking about the same thing in terms of if you're swing trading or whatever, make sure that you lock in your profits. Early and often, tight stop losses. Again, with the news coming out last week, and we'll see what the follow through is this week. But yeah, definitely be cautious of your trades. If they're not day trades, make sure that you lock in those profits and obviously. Have tight stop losses.
Mm-hmm. And my last thought here, there's a lot of conversation around, beginner traders, Robinhood traders, noobs and all that kind of stuff. I'm seeing it on financial media all the time. You're getting guys on Twitter that are getting more attention than they ever have. I'll just tell everybody out there one simple thing that I know as a coach, I know as a mentor, I know as a veteran. The skills that will last are the same ones that you needed 5 years ago and 10 years ago and 15 years ago. Routines, discipline, money management, structure, order entry rules, trigger rules, all the stuff that goes around being a trader. Don't shortcut that. Don't cut that. Like Matt always says, education before application. Get out there and build these skills. This market's no different than other markets in that regard. You're going to have back and forth and opportunities. Matt, great job today. Take us out here. Last thought from you.
Yeah, I'm looking at that 3,000 handle on the S&P like a hawk right now. There's certain moments in time as a trader where you have really big opportunity from a timing perspective. But in those moments in time, you also have an increased risk profile. And this is one of those times. Okay. This is one of those times where if we do see confirmation, we see support levels hold in a lot of those areas of the market that are sitting at support, trying to build bullish momentum on an intraday perspective. This could be a really good opportunity for those. But at the same time, in those moments of time where you have increased return, like you do right now, you also have increased risk. And when you have increase in return, you, as an active trader, you got to be willing to pull the trigger there, but you got to do it from a conservative perspective. And then as we build momentum going into that, then you start adding to positions. So how I would approach this market this week, given the fact that we are in that increased return, increased risk environment where we might see the market start to focus more on the daily news cycle than it has in the last couple months. Scale into positions as you see confirmation and build into those positions as they start to build momentum. And I'm seeing it across the board. Those scatter reports, the stock report and the options report, those have some really, really good trades on their setups. And because of that, work off those reports. I mean, I got a list of 30 potential candidates off those scouting reports this week. So make sure you're watching the scouting reports, work off those watch lists. A couple just to keep an eye on very quickly. A couple breakouts. We already talked about Docusign. Billy here breaking out of a cup and handle scenario that was on the stock report this week. Peloton, PTON. We saw some news here today that 24-Hour Fitness was going bankrupt. Do we see more of that across the board? And does that have a positive impact on a company like Peloton from a long-term perspective? Keep that in the back of your mind as you're going through your analysis. But from a short-term perspective, a trigger above $50, a close above $50 seems like a really easy trade. It tested above that level earlier today, couldn't hold it, currently sitting at about 49.83. Let's see that confirmed, because there's nothing above that level right now in the short-term perspective, and you'd be closing above a significant whole number in 50. So keep an eye on Peloton from a trading perspective. A lot of these need confirmation, but again, the technicals there, they're fairly strong. GDS, another stock on our report, momentum play breakout above that 64 handle, see momentum kind of take hold. In terms of those short-term bullish retracements in the distressed area of the market, we looked at RCL earlier today. We looked at Delta earlier today. We looked at Spirit earlier today. We looked at some of the energy sector like Continental Resources and Marathon Oil earlier today. All in really, really, really good, powerful bullish retracement type setups. And then, a little bit of a flag pattern there on Tesla, trying to, hold that 9 EMA. So I'm seeing this moment in time as one of those timings of the market where you're like, okay, this could be a really good environment to pick up those distressed areas of the market after the pullback. But again, with the increasing potential return that I'm seeing in some of these breakout plays and some of these retracements, you're not in the middle of a support and resistance area. You are setting on support, fighting for support, with a lot of the market trying to confirm off those support levels. So with that in mind, there is a lot of great opportunities this week. The market needs to hold its support levels. Those sectors need to hold its support levels, but work off those watch lists, because I'm seeing a great opportunity with confirmation. But once again, I'm going to say it again just to make sure that it is bleeding in your ears this week. In an environment where you have increasing return, it always accompanies increasing risk. Be cautious, be conservative, keep position sizes low, and scale into positions to really kind of build that position.
All right, love it. And if you're watching this right now on the recording on our YouTube channel, if you've not subscribed and clicked the bell yet, do it. We go live each and every day whenever the markets are live. Hopefully we can get, I'm thinking Zoom. I don't ever want to blame Google, by the way. Google, you are our overlords, and we bow down to you. There's no question about it.
You think it's better to blame Zoom here?
I don't want to blame Zoom either. I mean, it just must be something. I'll blame Cody. I mean, Cody, it's your fault today. No question. I have no idea. But we'll be back tomorrow live. And each
blame, and they're like, hey, watch me. I'm going to go up in the face of your negativity.
I'm going to make a 400% gain year to date in this environment. Yeah, Zoom's been a
Yes, Zoom is up 7% out of the anti-Tim Zoom comments.
Dude, it was up before I started talking about him, so don't blame me at all.
Google's
all right, guys.
Down on the day, breaking support. It's all your fault.
But it's up since we started talking about him. See, it's about correlation. It's about impact. I bet it is. I mean, since we started doing this, as flat.
The 1 minute chart indicates Google could care less about anything we just said.
I'll keep talking. We got to get it on YouTube for them to hear this, Matt. So we'll wait until it hits the website, and then we'll
act
see.
Like they're not listening to you when it's not live.
Oh, now there's your
you call them our overlords.
Privacy concerns. That's right. All right, guys, we're done. We'll be back tomorrow. See you then.